I am Chris Paul. I am the new CEO of Eagle Gold Corp. And we just recently acquired a new project in Idaho. That project is called the Hercules. It is a more or less orphaned silver asset that was very active in the 1960s, the 1970s, and the 1980s. So this is a time when the project saw roughly 350 drill holes, the development of a historic resource, and ultimately the collapse of the silver price in sort of the mid to late 80s. And ultimately, that is the reason that the project was sort of forgotten about. It was put on care and maintenance when silver fell below $4 an ounce, and sat there for 20 years. So it fell into an estate, which it sat for another probably 15, 20 years, and we were recently introduced to it. Took about 12 months, but eventually came to an agreement with the estate to acquire the project in August. So we, just completed a historical data compilation, and we are now looking to start planning out a drill program for this summer.
Good man, Chris. Lovely to meet you. You're new. 2 weeks into this, so 2 or 3 weeks into this. So congratulations and welcome aboard, I guess. We spoke with, I think it was Darren, beginning of last year when they were looking at, working on the Hot Springs project. Is that completely by the wayside, and we're just looking at Hercules?
Yeah, that's correct. So the Hot Springs was before my time, essentially, with the company, and they were actually able to give that back. So they sold it back to the original vendor and got back everything they paid in cash. So, they backed out of that one, obviously liked the Hercules better, and were able to get all their money back out of it. So I'd say best case scenario, certainly for disposal of the Hot Springs. Okay,
so that's gone parked up. We don't need to think about that or any conversations about that. We're starting anew from you. So we've obviously not met. I've talked about the company in its previous incarnation, but I'm going to treat this as a completely new conversation, if I may. So you've been brought on board. You talked a little bit about the asset there, but I'd like to try and understand, first of all, what's the idea with the Hercules asset? So I get that you've picked it up and it took a while but what is it? What has it got? What do you know about it? What's it cost you? And what do you think the possibilities are?
Yeah, well, the idea behind it is essentially a huge head start. As I mentioned, it's had roughly 350 historic drill holes and the calculation of a historical resource. So it's not your typical grassroots early stage exploration play where the company's relying on discovery to have a success. I mean, we're walking into something that has had a lot of money spent on it, and probably the replacement cost of all the drilling is something in the order of $30 to $40 million. Which we actually ended up buying for a song. So our plan going forward, obviously, this was the 60s and 70s and 80s. So this isn't a 43-101 compliant resource. And basically that's sort of step number one is we want to develop a resource on this thing. I mean, we've seen some of the numbers, in terms of, the historical calculations, which obviously, for regulatory reasons, we can't disclose some of those, historical figures, but, nonetheless, it serves as a really excellent guide for the future exploration on the project. And we're going to be utilizing that information to develop our own 43-101 compliant resource is the goal, and to basically expand on that as well. We think there's roughly 3 to 5 kilometers of strike length that potential here.
Right. So let's take into that if you don't mind. Which is there's a lot of historic data. Okay, it's no longer 43-101 compliant, but the base data is there. Are you going through a process of reinterpreting that drill core or drill data to inform one what you think you've got there, and two, how you go about creating value either through the drill bit or being able to put some data out in the market. So what's the first step in terms of the existing data?
So we're really fortunate. The consulting geologists that worked on this thing throughout the 60s and the 70s and the 80s actually kept, I'd say, probably 90% of the data. in paper format in his basement. So we purchased that for, the whopping sum of $2,000. Like I mentioned, probably $30 to $50 million in, replacement costs. So, that was huge. And that included the assays, all the lithological information, basically all the information for 301 of the drill holes. So, we began a pretty epic digitization process in September, which took us right through until December. There was probably 20,000 lines of Excel spreadsheet, just inputting all these historic assays into the database. But, now we've got it. Now we've put it together. And we're working with a company called Goldspot Discoveries, who's, a very young, dynamic company, very technology focused. So we've actually signed a CA with them. They've got all of the data that we've digitized, all the drill data, and they're developing a 3D model for us. So yeah, in terms of reinterpretation, there's certainly going to be more of a modern technological aspect to it. In the 70s and 80s, this was paper cross sections, right? And you were sort of limited to, what a geologist could draw on paper. But now, obviously, we have much more powerful tools in terms of, interpreting what this body of mineralization looks like, and what are the controls, and where can we look for, extensions of it. So that's really going to form the sort of, foundation of this 2020 drill program that we're going into.
Right. Okay. So there's a reinterpretation. There's a report that comes off the back of it, and you're looking to hopefully identify targets for your drill program for later this year. Can you again? You've done so. You completed that analysis, you said, in December. Have you started the process of identifying the targets, where you go, and how you approach this? Because I'm guessing, given the land package, you're going to have a bunch of optionality, but you need to fund this, so it needs to be well thought out. So again, where are you with that process?
Yeah, no, exactly. So by December, we'd essentially just inputted all the data, right? So we basically just made it digital. Right now, we're still in the process of building the model. So what that's going to do is it's going to essentially show us what does this historical resource look like in 3 dimensions. And obviously, a lot of the drilling that we intend to do this summer is going to be within that historical resource area. Working on defining that. There are, of course, other targets along strike. There's actually 4 other targets along strike. It's a relatively simple geometry overall. So it's what's called a stratigraphically controlled deposit, meaning it's all hosted within one rock unit called the Hercules rhyolite. So basically, it's a matter of just following that Hercules rhyolite and where these fluids came in and deposited silver and lead and zinc in that unit. So there was probably 80% of the drilling was in this historical resource area, and that's where we're going to focus ours as well. But there was 4 other targets along strike, within the same unit, and no drilling between these. So these 4 other targets, combined to form this sort of 3-kilometer long belt of mineralization, and there's very, very good intercepts in these other targets. There just there wasn't enough drilling to make those part of the resource. So the other thing that we did was there was some IP geophysical surveys that were done actually after the drilling. So the drilling wrapped up in 1985. 1987, the silver price was depressed. They didn't have a lot of money, but they went out there and started doing geophysical surveys to sort of help guide their exploration and expanding it. And so that's something we digitized as well. That's also going in the 3D model, and that's also it's actually illustrated that between all these zones within this Hercules rhyolite, the same sulfides that host the mineralization are almost certainly present between the zones. So it shows that there's a lot of continuity, between the zones. And that's basically where we're going to be, testing and looking to sort of expand on the resource, the historical resource.
Okay. And Gives a sense of the type of ore body there in terms of what were people mining for? What were the sorts of grades? What were the sort of structures? Is it fairly homogeneous, or are we chasing high grade veins? I mean, in simple terms for people.
Yeah. Well, it's interesting. So there was actually a technical report written on the project in 2011, and that was filed on CDAR. It's publicly available. So it sort of envisions two potential, ways to look at it, right? There's the bulk tonnage, low grade, wherein, a company could essentially come in and mine this entire rhyolite, because the background silver content in this rhyolite unit is very high. I mean, not even there's high grade zones within it as well, but the sort of background is somewhere in the order of 0.6 ounce per ton. That's your background, right? Within that, you get these high grade chutes, which are these sort of vertical pipe like bodies, and there's drill intercepts ranging up to 60 ounce per ton in these high grade chutes. So, it's sort of a combination of like a very large, this 2011 report, which is on CDAR, talks about 200 million tons of this low grade material, and within which you get high grade chutes that run up to 60 ounce per ton. Now, I think, realistically, if you sort of combine the two, you can form bodies that are more or less on the order of 4 ounce per ton silver, right? So that's, this is the US ounce, 34 grams. So call it, roughly 140 gram per ton silver. And I always like to kind of, use a gold silver ratio of, 70 to 1 to, kind of make it easier to sort of compare and gold equivalent, that's about 2 grams per ton.
Okay. Okay.
As the sun comes here and starts to blind me.
That's us looking at you. We should. So you do have a lot of data, and you've got some optionality in terms of how you come at it. Like I mentioned earlier, you need to fund this. So I get that the guys, or you now got your money. Was it 1.27 million for the assignment of interest on Hot Springs? So you've covered your costs, but have you, or are you going to need to raise money for this drill program? If so, what sort of quantum, and what will that allow you to do?
Yeah, no, absolutely. So obviously the Hot Springs was great, and got us some cash back in the bank. So we're sitting at about 1.4 right now, but certainly, we're looking at, what we'd like to do a fairly large drill program this summer. So yeah, we are going to need to raise some money. Now, as we discussed, this is ground floor. I mean, we're just in the midst of launching our new website, our new corporate presentation, which is all hopefully going live this week here. And, we've basically prepared, a sort of roadmap of what we'd like our press releases to look like. I mean, we've got all this new digitized data. We've got a lot of information, that we've put together over the past few months that we're going to share with the market, and, obviously bring awareness, get the story out there. And then we're going to look to do a raise. What that price is going to be, I don't know yet. I certainly hope it wouldn't be down here, but yeah, I mean, the objective is, over the next couple of months to sort of bring awareness and get the share price moving a bit, and then look to do a raise in probably sometime in the early spring.
Okay. So I get the whole marketing thing and presenting your wares, but you're saying at the moment you can't give us that guidance as to what that looks like yet, but you will over the coming weeks and months be sharing with the market how you intend to go forward. Because I guess what we're looking for, because it's sat for the last year at, well, what are you, 10 million market cap, something like that at the moment? It's kind of it's been 9. Yeah. So it hasn't moved. The story hasn't moved. There's a new asset, new CEO, new commodity. So it's completely new to people. And the question is, do you think it's going to be, will it be more of the same again? Reasonable question. Or what's the significant difference between how you're approaching it now and how the company approached it previously? And you probably can't talk to the previous bit, but in terms of how different is this story now from what went on in the past?
Yeah, and like you said, I can't speak too much to what the Hot Springs asset is, as I wasn't really involved back then. But in my opinion, I think the Hercules asset is a bit of a game changer for the company. I mean, this is much stronger than you had with the Hot Spring. This is a project with 301 drill holes already in our database and a historical resource. So we're coming at this thing with a huge head start. Hot Springs is a project where it's a major risk. I mean, the risk is incredibly higher. You have to make a discovery to have that success. Where we're walking in here with something that's pretty much already there. We just have to rediscover it and re-drill it. We've got obviously technical guys on the team now. Myself and Antoine is our new VPX as well. So,
tell me more about that, because that's important to me, because I didn't get that sense before. It felt like a finance-driven company. Tell me about the technical experience. Like, what have you and any relevant person done before? What is the expertise you're bringing which is relevant to this particular asset?
Yeah, no, absolutely. Like you said, I mean, there was, talking about the differences, there was no technical. I mean, this was an entirely, sort of capital markets, based team before, and they didn't have that sort of technical expertise. They were relying on sort of third-party contractors and stuff like that. So we've got a much more well-rounded team. You never want to see all technical. You never want to see all markets. But we've got a lot of firepower on both sides now. Antoine is joining the team. He comes from, he spent his last 7 years at the Braylorn deposit in British Columbia building up a resource. So he brings that experience to the table, right? Like he's walked into a deposit before, which again was a historically mined deposit, and re-drilled it and sort of brought it back up and built sort of a resource on that. Myself, I've got lots of experience in the industry. A lot of my work actually was up in the Golden Triangle of British Columbia. We had a bit of a success up there. Actually, we made a discovery of a copper gold porphyry in Northwest BC. So, together, I think, Antoine and I, bring a lot of technical knowledge and the ability to develop a resource, and back that with Ray and Darren and the other guys who bring a lot of experience on the capital markets side. I think we're coming at this a lot differently than the old days, we'll call them.
Right. Well, okay. Like, it's not a criticism of what went before. It's just I think the story was harder to understand. I get what you're trying to do with this new asset, and I'm looking forward to getting drilling again, because these can be exciting, going back and using old historic data, but reinterpreting it can have a profound effect on valuations and perceive a creative components of the story. So I like that. Well, look. I guess the bit I'm missing here is, the amount of money you're going to be looking for and allocating to, your plan moving forward, and indeed laying out the plan moving forward. So look, I appreciate you coming and telling us the story today, Chris. Stay in touch. Let us know how you get on, and we'll be delighted to take that call. Yeah, no, absolutely. I do appreciate it, Matt. And I'll just leave you with this one thing, because you mentioned reinterpreting some of the old data, but I mean, there was feasibility studies done in the early 80s. This was something that was going to go into production. So it's not like we're coming in here and we have to take a new look at something or sort of reinvent something that didn't work before. This was something that was going to work before and had these economic studies done on it. But you had silver go below $4 an ounce. So, another major difference today is simply the silver price environment. This was a project that was going to work at just anything above $6 silver, pretty much. It was going to work, and they just didn't have that back then. So, nothing here that we need to reinvent or remodel and try and make work because it had some fundamental flaw. We're simply in a different price environment for silver. So. Anyways, lots to work to do, going forward here. Ground floor sort of opportunity. Everything's just coming together right now, and I'm just excited to be getting the story out there.